Okay, great. Okay, great. Now, okay, so we're done with the slide. So one questions that I want to ask before I proceed further is because AIMST University, from what I know, is famous for particularly like pharmacy program and medicine side. So I want to know, what are you studying right now? Are you studying medicines? Are you studying pharmacies, or you are in the business field? Or I think AIMST does offer IT, something along the lines. Okay, type in the chat box below so that I gotta know which field you guys are coming from. Okay, so MBBS, all right. So dentistry. Okay, anyone, any more? Okay, waiting for uni enrollment. Great. Okay, so we have someone from NF. Okay, so I think the majority would be over the medicine, dentistry, pharmacies, or the science side. Okay, so or another accounting and finance. All right, cool. Okay, so today this topic, because to 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 match the objective of the business and investment 101, okay, and understand that most of you are not from the finance background, and I'm going to give you information based on my very personal experience, coaching people, as well as my own investing and trading experience. And I'll give you practical knowledge that you guys will learn, you guys can learn and apply right after this. Is that cool? If you are ready, type ready in the chat box, then we will begin our sessions. All right. Okay, cool. Okay, great. Okay, so everyone is ready. Okay, so the title for this is what to expect from the stock market. So what is stock market, and why particularly should you invest in stock market? Why not other things? Why not property? Why not gold? Why not cryptocurrencies, which is very hot right now? And I'm going to give you some reasons later. Not that the rest are not good. And in fact, I invest in all of them. The only thing is, I'm going to give you reasons why the stock market might be the asset class that you want to look at right now or right after you have graduated and enter the job force. So again, my profile, I think just now is already been introduced. Basically, I'm a position trader, investor, and coach. So I want to explain what is a position trader. So as far as trading is concerned, a lot of people might have the perception that trading is something like gambling. Okay, you have to like monitor very closely. You have to like, okay, glue your eyes to the monitor, to your computer, to your laptop, whatever device, and then only you can profit from the market. If it is like you miss it for the split second, then you lose money. Now, trading is not like that. There are many types of traders out there. Now, investing, I believe that most of you will know. Okay, it's like buy, and after a few years, wow, you got profit and things like that, or you got the dividends and things like that. It is more towards a long-term approach. But what is a position trader? So position traders are basically a type of traders whereby we take a position. Now, when you hear the word positions, it means I either buy or sell the share. Okay, meaning that I have something in the stock. Okay, so at the most generic level, when I say I have a position in the stock, most probably it means that I bought the stock and I'm holding the stock. So position trader, what we intend to do is if we think that based on our analysis, the price will go up. It could be next week or next month or next year, we don't know. But if we analyze that the stock has a higher chance to go up, then we will buy and take the position in the stock. Take the position in the stock, meaning that we buy the stock. And when we buy the stock, we hold. Okay, so the time frame for us to hold the share could be like few weeks or few months or up to a year or two, depending on how great the stock is. Okay, so this is something that I want to clear out. So the rest, I believe that you already know. If you don't know, then you can. Basically, I spoke for Bursa Malaysia, which is our exchange in Malaysia, and I speak for investment banks and things like that. And I also frequently speak for universities like you guys. Thanks for having me. Okay, and I've been featured in medias and things like that. Okay, so what you're going to discover today is First one, why should everyone invest? Now, this topic, I believe that a lot of people have already known, but I want to put everyone at a common ground and understand at first place, why should everyone invest? And the reason is not just to make money. Okay, there is a very fundamental reason why we should invest. Now, second, why should you choose stock over other asset classes? And what is a stock? Okay, and what is a stock market? Okay, a stock market is basically a supermarket of stocks. So, what is stock? Okay, later I'll explain. And don't worry, I wouldn't go too theoretical. Okay, I will explain just until the level that you can have enough understanding that what this thing is all about. And then if we have extra time, okay, I probably would prefer to do a little bit of Q&A so that I know what are the questions that you have. Okay, so and how to get started with minimal capital, because I get started with very little capital as well, just like most of you. Okay, unless you already owning or doing some businesses right now when you're in uni, okay, or you inherit some wealth from whoever. If not, I think most of you will be, your starting point would be something very limited in terms of capital. And last but not least, how to scale your portfolio in the future. Okay, and on top of that, I'll also share with you what are the possible ways that you could retire earlier. Now, how many of you want to retire earlier? Type the age that you want to retire earlier. Now, when I say retire, it doesn't mean that sit home and do nothing. Type the age that you want to retire in the chat box. Retire basically means you can choose whether or not you want to work. And I don't mean typing the letter H. I mean what's the age? Okay, what's the age that you want to retire? Meaning that you could choose whether or not you want to work. Okay, meaning that you can choose. If I don't want to work for money, then it's fine. Okay, I can do the things I like. I can go gardening. I can go play golf. I can go and do the things that I want. Okay, so some say 50, 60. Mostly, I think it's 40 to 45. Am I right? Okay, 40 to 45. Okay, by 27, you're going to work hard. Okay, if you want to retire by 27, you're going to work hard. Okay, not to say that it is impossible, but you need to work hard. Later, we will work on a little bit on the math side. So, are you excited for this? If you're excited for this, type 3 in the chat box. Type 3 in the chat box. Number 3. Okay, so let's begin. Okay, let's begin. Now, what should you invest? Why should you invest? Sorry, I think I typed the wrong thing. Why should you invest? And this is the classic roti canai example. Now, I believe that everyone knows what's inflation. So if you know what's inflation, type inflation in the chat box below. Inflation basically means your 100 ringgit today will not worth the same next month. Okay, if you know what's inflation, type inflation in the chat box below. Okay, so inflation basically means your $100 today will not worth $100 next month, next year. So you can see in 2005, roti canai was big and it cost only 50 cents. And in 2010, roti canai cost 80 cents, increase in price, and then the size basically shrink. And in 2015, okay, roti canai is now cost 120 and the size becomes smaller and smaller. Okay, so basically with the same amount of money, okay, like last time in 2005, if you have 1 ringgit, probably you can get like 2 roti canai and you can probably have it for lunch and then skip your dinner because it's full. Okay, probably. Okay, but right now with maybe a ringgit 20 cents, you can only get once, and probably it's not enough. Okay, for me, 1 piece of roti canai right now to me is not enough. Okay, so this is why, in a nutshell, we need to invest. Okay, this is why, in a nutshell, we need to invest. Okay, so now these are how much, okay, Mac value meals cost 10 years ago. Now, what's the price of Mac chicken meal right now? Can anyone recall what's the McChicken meal right now? Because back then it was the cheapest one at 5 ringgit 95 cents. What's the price of Mac value McChicken set right now? The regular one. Okay. The price is almost double already, if you can recall. If you can recall. So this is the reason why, okay, investing is a must. Investing is a must. Okay. So most people know that compound interest is the key of investing. Okay, and wealth accumulation, but not many people can truly comprehend it. Now, when it comes to investing, a lot of people know that because of Warren Buffett or because of whoever. Okay, today if you put 1,000 ringgit into something that earns 10%, for example, something that earns 10%, and tomorrow, after a year, it will be like 1,010. So you earn $100, and then you will put this 1,100, 1.1K into the same investment asset again and earn 10%, you will earn more than $100 next year. The return is snowballing. It becomes bigger and bigger and bigger and bigger, despite the fact that the percentage might be the same. Okay, so this is what we call compound interest. Okay, most people know that compound interest is the key of investing. Okay, and the wealth accumulation, in wealth accumulation, okay, but not many people can truly understand that inflation is a reverse compound interest. Now, if you understand what is the rule of 72, now how many of you don't know what is the rule of 72? You type NO no. You don't know what is rule of 72. Anyone? Okay, so a lot of people, quite a number of people don't know. Okay, rule of 72 is a quick rule to tell you that how much your money would double. Now, what does it mean by double? Double means your 1 million becomes 2 million. Your 2 millions become 4 millions. Okay, now the rule of 72 suggests that, okay, you divide the number, the return by 72, you get the years to double your money. Okay, you get the years to double your money. Let me just put the screen into white screen. Okay, so for example, this is rule of 72. Okay, now if you put your money into fixed deposit, right now fixed deposit is like 2%. So let's say 3%. So 72 divided by 3 is how much? Anyone? Faster? Math. Okay, anyone? What's the answer? 72 divided by 3. Okay, 24. Very good. So meaning that this rule tell you that if you are putting your money at a 3% annual return, it would take 24 years to double your money, meaning that 1 million become 2 million, 2 million become 4 million, 4 million become 8 million. Okay. My question to you is how many 24 years you have in your life? Okay. So putting money into fixed deposit is not feasible, at least at this era. Okay. Now, for example, if you can generate something at 8% every single year, okay, then how many years your money would double? Okay, how many years your money would double? Okay, 9 years. Very good. Okay, so this is basically what rule of 72 is all about. Okay, so if you can generate 10%, then your money would double in seven something years. Okay, 7.2 years. Okay, so this is essentially what rule of 72 is all about. Okay, so let's go back to the this one. Okay, so inflation is a reverse compound interest, and the average inflation that the government posts is actually 3%, around there. Now, whether or not you believe our government is not our discussion here, but government say that our inflation is 3%. So let's trust the government for a few minutes, okay? And we use 72 divided by 3%, which is the inflation rate posted by government, okay? And then it basically means that the value of our money would halve in 24 years, okay? When it's returned, it is times 2, okay? So when it is inflation, you divide by 2, okay, meaning that it is half, okay? So 72 divided by 3, which is the inflation rate that our government told us, it means that our money will halve every 24 years in terms of value. But in fact, this is not the case. Now, I'm not sure about whether or not you will agree with me. I know that a lot of people are in the medicine line or pharmacist line or dentistry lines. From several researchers, the annual inflation for medical costs is around 12%. I'm not sure if you agree. If you think that this information is somewhat correct, then you type agree. I'm not sure if you know the price or not, but this is from my researchers. So I'm not sure if that is true, but to a certain extent, I believe that the cost of medication can increase. Now, anyone, can someone tell me whether or not this information is correct? Okay, because this is based on the several articles and researches that other people have done. Okay, and the cost of education, okay, the cost of education, tertiary studies, is inflated at around 6% every single year. So I personally don't think that, okay, I personally don't think that our inflation is just 3%. I don't think so. Okay, it is something more than 3%. Okay, so that's why we need to invest. Okay, now I would say investing right now in this era is no longer a choice. It is a must. Now, for our parents or grandparents' era, you can probably work very hard and make some money and save it in the bank, and then things can still work out. But right now, in this decade, I would say if you only put your money in the bank, things are not going to work out over the long run. So investing is no longer a choice. A lot of people say that when I have a lot of money, then only I invest. That investing makes sense. That's not true. That's not true. Okay. The most basic level or the most basic type or level of investing that you should do, the objective is actually just to combat the inflation that we are facing right now. Okay, so I would say investing is no longer a choice. It is a must. We are not living in the era whereby our grandparents live and working very hard, save the money and you can retire. Right now, it's not the case. If you read several studies about the EPF, most people do not have enough money to retire. Okay, that is just the cold hard truth. Okay, so what asset classes you should look into? Okay, what asset classes you should look into? Okay, now how many of you so far you enjoy the sessions? If you enjoy the sessions, type C in the chat box. Okay, type C in the chat box. Let me know that you are still following along. Okay, you are still following along. Okay, very good, very good. Thank you very much. Okay, now, right now, we're going to enter into another topic. We talk about asset classes. So, what asset classes you should be looking into, and what are the choices out there? Okay, what are the choices out there? So, the first thing, let's talk about equity. So, what is equity? Equity basically means, okay, I just put it in lump together, equity plus a little bit of derivatives. Okay, so meaning that whatever the stocks, the funds, the ETF, those things along those lines. Okay, these are under equities. So which is what we're going to discuss mainly today, and it's stock. Stock is under equity. Okay, the next thing that we'll talk about is real estate. Okay, so what real estate has been the favorite for many people, especially Asians. Okay, especially Asians. So real estate, basically you buy house, buy condo, buy land, buy factory, things like that. Okay, and the next we talk about precious metal. Precious metal basically means your physical gold or physical silver. Okay, and this has been a very good, not to say very good, has been a very popular investment among the elderlies of the Chinese and the Indians. Okay, so a lot of people love precious metal back then. Okay, but right now, is it a good investment? We'll discuss. Okay. Next, we talk about alternative investment. So, what is alternative investment? Alternative investment are things like very specific, like wine, like watches. Okay, like some people invest in branded watch like Rolex, like Patek Philippe, and things like that. And there are also people, if you watch some movies, you probably have come across like those ultra rich that invest in antiques, that invest in paints. Okay, like one paint, okay, it costs like 2 million. And then after a few years, maybe the paint is being valued. Okay, people want to buy that thing and they'll send to an auction house and then you auction for a higher profit, things like that. Okay, you probably have seen this in the, how many of you understand this? Okay, you have watched movie that those ultra rich, okay, they will go to an auction house and then they have like a piece of art or a piece of antiques or whatever thing they'll put onto auction. This is how the ultra rich make money. Okay, and this is what we call alternative investment. These things are very specific and it is not that accessible for most people out there. They are more towards the collectibles. Okay, they are more towards the collectibles. Okay, like maybe right now you buy a very limited car, a very rare car, then after 20 years, you sell again. Okay, by auction most of the time. Okay, these are alternative investment. Okay, now last but not least is I would say is the modern day of commodity is what we call cryptocurrencies. Cryptocurrencies, if you don't know what's cryptocurrency, is basically like a digital currency or a digital commodities. It is something that is very virtual, okay, but it has been a thing. Okay, you probably have heard about Bitcoin. Okay, Bitcoin is the largest cryptocurrency in market cap, followed by Ethereum, okay, and other coins. And for those you have been hearing, you probably also know that there's one coin called Dogecoin. Okay, if you know what's Dogecoin, type Doge. Okay, Dogecoin has been a thing that has been a thing that have been very hot. Okay, like Dogecoin, even like Shiba Inu. Okay, so there's one question: is mutual fund categorized under equity? Now, mutual fund is like a mixer. Some mutual fund that invest in stocks, then you can say there's an equity fund. Some mutual fund that invest in bonds, then there's like bond fund. Now, bond is also another asset class which I'm not going to cover. And there are also some mutual funds that invest in fixed income, which is money market. So that's like your fixed D. Okay, basically a fixed D or things along the line. Okay, so we're going to discuss these 5. Why? Because these 5 are things that make people money. Okay, now let's have a little bit of discussion. Okay, let's have a little bit of discussion. Equity, okay, is like stocks. There are a lot of advantages of stocks. Okay, the first thing is it's easy to buy and sell, and you can have a little money, you can still invest, and you have a lot of money, you also can invest in the stock market. Okay, I'll talk more about equity later, but let's move on to real estate. Now, can somebody tell me what is a good thing about investing in property or real estate? What's a good thing about investing in real estate? Because I think this one is something that is more relatable to most. Price won't drop. Now, actually, property price can drop. Okay, just that it is not something common that we have seen, at least in Malaysia. But there are definitely properties that suffer from price dropping. Okay. Now, yes, you can flip the house. Now, I would say the great thing about real estate is you can be short term, you also can be long term. What does it mean by short term? Short term in real estate probably is like you buy a house and then after it is finished, constructed ready, or after 5 to 10 years, you sell the house. This is what I call house flipping. Okay, and then you earn a capital gain. Now, for the long-term strategy, meaning that those people who invest for long-term, they collect rentals. Okay, and this is the first thing. It fits people who have I would say it's a different time frame of investing. Okay, but of course it's not like 1 month lah. Okay, then you cannot make money from real estate unless you are an agent. Okay, that's the business already, not an investment. So real estate, the first thing is you can be pretty short term, like few years, or you can hold a property for a decade or until you are not in the picture already. You give to your children, things like that. Second thing is because of leverage. Okay, second thing is because of leverage. Type leverage in the chat box below. Now, why real estate? When it comes to real estate, we all talk about leverage because without leveraging, it is very hard to buy real estate. Okay, so type leverage in the chat box below. Okay, now today, if you buy a house that costs $500,000, okay, that costs $500,000. After maybe 10 years, it becomes, okay, let's put it this way. You buy a house at 500,000 and after 2 years, it becomes 500 or maybe 600,000. That is just a 20% return, which is not a lot. Let's say in 3 years, 20% is not a lot. That kind of money, you can probably make it in like half year or 1 year in the equity market. But with leverage, a house that costs you 500,000, you don't need 500,000 right off the bat. You only need like 50,000. The rest you borrow, and the banks are more willing to lend you money to buy real estate compared to other things that you see in this slide. Okay, you can borrow money and buy stocks, but banks are not going to give you good rates or are not going to give you good offerings. And you cannot leverage like real estate because real estate you can leverage like 10 times. Okay, meaning that you want to buy a house of $500,000, you only need like 50,000 for down payment. The rest you can borrow. This is a good thing about real estate. Without leverage, I don't think real estate is a good investment. Okay, it's like you buy a house today with $500,000. After 10 years, it becomes 1 million. It double, meaning that 100% gain. But if you use cash to buy, okay, meaning that your 500,000 become 1 million in 10 years, that is not a very good return to me. There's not a good return to me, at least to me, because it is like simple interest. Okay, it's like every year it's like 10% only. Okay, so it's not a lot. And also, real estate is very illiquid, meaning that it's not easy to sell a house compared to a stock. So these are the things that you need to know. But there are, of course, a lot of benefits when it comes to investing in real estate, especially if you want to do business next time. Because let's say you want to do business, but you don't have enough money. If you have houses, you can probably put it as a collateral and then borrow more money, or you can refinance your house. So these are the pros and cons. Okay, it's definitely not a small investment. Okay, so and once you graduate or right now you want to buy real estate, I don't think it is that possible because you need good documentations, you need to pay taxes, things like that. You need to have good income before you can get the loan. Okay, so real estate, I hope that everyone understand. Okay, next we talk about precious metal. So precious metal, in this context, we are talking about people who invest in gold bars, silver bars, gold coin, gold jewelry, okay, which a lot of elder generations like my grandparents, okay, especially those who are Chinese and Indians, our grandparents or great grandparents love doing that. Okay, buy golds, especially jewelry. Okay, now can this make money? The thing is definitely can. The only thing is precious metal is an investment that don't give you cash flow. Now, if you invest in stock, probably the company can give you some dividend. Even if it doesn't give you dividend, you can sell it very quickly and it is very liquid. Second, if you invest in real estate, okay, there is something called rental. So there is at least some cash flow, but precious metal, there is no cash flow. Okay, so that is the thing right now. Okay, precious metal. Now, your only bet is this: when you buy the precious metal, the price could be like $1,500 per troy ounce, okay, per ounce. And after that, when you sell, you can sell probably like $2,000 per ounce. That's your only thing. If the gold price go down, there's nothing that you can do. You basically you make loss. It's unlike maybe real estate. If the price don't really go up, if you can rent, you still can make money. If you can do business, you can convert it into maybe a hotel and your business can make money, things like that. Yeah, you have more flexibility in real estate or equity compared to precious metal. Okay, so next we talk about alternative investment. Now, alternative investment is the same thing. It most of the time, it does not give you cash flow. And it is not widely accessible for most people out there. But when it is done right, you can make a lot of money. Okay, so there are many alternative investments experts right there. Like if somebody is good in wine, then they are the wine expert. If somebody is good in watch, then they are the watch expert. Okay, so there are different kind of things. Some even invest in royalties. Okay, so alternative investment on this list, alternative investment, I would say, at the most generic level, this is the toughest to enter. Okay, this is the toughest to enter, but this asset class does exist. Okay. Now the next thing we talk about is cryptocurrency. Now, cryptocurrency is a very volatile investment. Even if you don't want to trade it, you just want to invest for the long term. One thing that you need to know is cryptocurrency is very volatile. And yes, the adoption rate is going higher and higher already, but there is still a risk that this thing, we don't know what's the future. Because government around the world they want to regulate this. They want to tax this. Okay, so these things, cryptocurrency, definitely you can make some money. Okay, but just understand that it is very volatile. And yes, you can generate some cash flow from cryptocurrencies right now. Okay, in especially like this couple of years, whereby many platforms have coming out that gives you interest for the cryptocurrencies that you own. Okay, so these are the assets, okay, that we have talked about. Okay, and let me share with you. Now, don't get me wrong. I invest, okay, in all of this. Okay, I invest in all of this, but equity is the largest portion. Okay, in my investment, equity is the largest portion. I do have real estate, but not very active in it. It's not really a very active real estate investor, at least me lah. Okay, and looking for opportunity, and definitely real estate is something that I will look into, and you should too in the future. Precious metal, I do keep some, but it's not my main thing. Alternative investment, I do have some collectibles, but not a lot. It is the least amount, the smallest investment, okay, of me. Next to that will be precious metal. Cryptocurrencies, I allocate about, right now, at the point of speaking, I allocate about 3%, okay, in cryptocurrencies of my entire financial asset, okay? And it has been growing up these few days, and I haven't really calculated the portion, but I allocated 3% few months ago into cryptocurrencies. Right now, it's definitely more than that, because we all know that the price of Bitcoin and things like that already go up. But I want to discuss why I like stocks. Okay, why I like stocks. Now, first thing, you are able to start with small capital. This is why I like stocks. With maybe a few $1,000, you can definitely start buying stocks. Okay, you can start buying stocks. Or you can start with like ETF, which is great. Okay. The next thing that I want to share with you is you can scale larger as well. Now, it is very important to know that when you are investing in something, it must be scalable. If that thing is not scalable, I don't think that investment can go very far. Okay, I don't think that the investment will go very far. So when something grows, when you grow, okay, your investment must have the capacity to take more capital and scale as well. Okay. How many of you, you believe you make some money in the future and you'll be rich and you have more money to invest on? Then you type rich in the chat box below. Type rich in the chat box below. There's a question. What is your view in investing into Bursa right now with political instability? Later, towards the end, I'll talk about the market current situation right now. So how many of you, you believe that you will be rich one day? Type rich in the chat box below. Okay. So if you believe that you will be rich one day, you will make some money. The asset class that you choose to invest must be able to cope with it. So what's the point if you're investing in something that you cannot allocate too much money into it? Then there's not a scalable investment. Stock is very good. Why is good? You can get started as low as like a couple $1,000, or when you have 10 million, you still can trade stocks. You still can invest in the share market. There is no upper limit to what you can do in the equity market. Okay. Next thing is you have plenty of choices. Stocks, you have ETFs, and their derivatives. Their derivatives means probably things like warrants and options. You really have a lot of choices. When it comes to stocks, Malaysia, we have like 800 over stocks and 900 stocks. And in the US, you have like thousands and thousands and thousands. There's just, the opportunities are endless. Now, if you do not want to study too many things, then you can buy exchange traded fund, which is ETFs. I'll explain these later. Okay. So, and it is suitable for all kind of objective. You want to invest for long term? No problem. You want to trade for mid-term, meaning that you buy the stock now, you want to sell after 3 to 6 months with a profit, with a capital gain, you can do this as well. If you have time, you want to do some speculation, you want to do some day trading, you can do it as well. There is no restriction on what you can do with stocks. Next, we're going to talk about liquidity. Stock, among the asset classes that I showed you just now, stocks is the most liquid. What does it mean by liquid? It means that you can buy and sell very easily. It's like within just a couple of seconds. Okay, next would be maybe cryptocurrencies nowadays. It's also quite liquid. Okay, quite liquid. And the cost of trading stocks has been going lower and lower as well. Okay, now, with ever rising inflation, okay, the question is, how can we become wealthy and achieve financial independence or financial freedom one day? Because the inflation has been going higher and higher and higher. Okay, so how can we get higher return? Okay, how can we get higher return and let the value of our money grows and grows? Okay, stock is basically, okay, my top recommendation or top choice when it comes to like giving you guys an idea what you can do or giving you guys a direction. It would be stock. Okay, it would be definitely be stock. Now, how many of you don't quite understand what is stock? You let me know in the chat box below. You don't have any idea what is a stock. Then you say you type an X. Okay, you type an X in the chat box if you don't quite understand what is stock. Anyone? Okay, because I understand that not everyone is coming from a finance background. Okay, now very good. Okay, so what we want to, okay, let me explain this way. Let me explain with the simplest I can. Okay, now, for example, this is me. Okay, this is me. So I'm good in doing something. What's the something? Okay, let's say I'm good in selling burger. Okay, I'm good in selling burger. But the thing is, I only have one store right now. I only have one store. And I want to expand. Okay, I want to expand to maybe an outlet, but I don't have the money. Okay, I don't have the money. So what I can do is I ask from you guys. Okay, I ask from you guys. Okay, so I'm good in burger. I present to you my business plan and I want you to invest into my company. Okay, so for example, you guys invest into my company. Let's say I put 100,000 myself and you guys put the rest, maybe 900,000. So we have 1 million here. Okay, so each of you would get a certain percentage of ownership of this company. Maybe a new company called a new burger store called BG restaurant. Okay, burger restaurant. Okay, now, so I get the money and I do the business. You guys have the ownership. So when this business make money, okay, all of you who have invested in my business, which means you own the stock of this business, okay, you all would get dividends, okay, when the company gives dividend. Yeah, meaning that you are entitled to any future earnings distribution. Now, if I don't give dividend, what you get? You still own the share. So for example, last time you put in maybe 10,000, okay, 10,000 worth of shares. Right now, because my business grow bigger and bigger, okay, maybe I open 2 branch, open 3 branch, my burger restaurant would worth more money. This business worth more money. The value appreciates. So what you can do is you can sell off your shares. Last time you invest with 10,000, right now it could be 20,000. So you can sell away to another person who might be interested in investing into burger restaurant. Okay, so a share is essentially an ownership of a company. Okay, a stock or a share. Okay, in US they call it stock. In UK they call it share. Okay, in Malaysia we Rotaract. Okay, sometimes stock, sometimes share, but they are the same thing. Okay, so these are in general, this is what we call a stock. So a stock is the ownership. Okay, the stock is the ownership of the a company. So meaning that every time you buy a stock, okay, every time you buy a stock, you are one of the owners. Like for example, if you think that you like Apple, this company, if you like Apple, you can buy Apple shares. Then you actually own. You're actually one of the shareholders of Apple of like 0.0000001%. Okay, it's a very small, tiny ownership. Okay, so if next time Apple gives dividend, maybe the business make money, okay, then you get a little bit. But if you're not into that little dividend that cannot even buy you a Starbucks coffee, then what you can do is when the share prices go up because of whatever reason, you can sell the share price. Let's say Apple is right now worth $100, $180 per share. Next time when it worth like $200, then you can sell the share at $200 and then you can make a $20 profit per unit of share that you have. Okay, and stock market is basically a supermarket of stocks. That's how we can understand it. Okay, so that's the thing that we want to talk about. Okay, stock market is very good and it gives a lot of opportunity to all of you here. Now, back then when I was still in uni, I don't have great opportunities like what you guys have right now. Okay, like what you guys have right now. Okay, back then, if your capital is very limited, you got no choice, but you just put in mutual fund. And sometimes the mutual fund, the unit trust is not performing well. Okay, and it's very slow. And the charges are quite high, even until today. Okay, so I just want to give you a few, I want to set the right expectation for you guys first before we even talk further or before you even go out and think like, okay, what you want to do with with the stock and things like that. Okay. So let me share with you what you need to prepare next time if you want to choose this route whereby you want to use equity to build up your financial empire, for example. Okay. So these are the things that I want to share with you. Now, as I mentioned just now, I believe that most of you would start with very minimal capital. Okay. Very minimal capital. So here are the things. The first thing is, can you do progressive top up? What does it mean, progressive top up? So next time, maybe every month you can top up $500 into that investment. This is what we call progressive top. So for example, for a start, you put 2,000, then next time, every month you put 300 or 500 from your active income. Okay, from your active income. This is what I call progressive top up to keep investing in that company or that funds, whatever thing. Okay, now second thing, what we call is called monitoring. Monitoring here means when the market is open, like Malaysia market is 9 to 5, okay? US, then you have a different time. So when the market is open, can you do monitoring? Do you have the time luxury to monitor the markets? Maybe next time, for those who study like pharmacies, like dentistry, medicine, I don't think you have the time. Okay, I don't think you have the time for monitoring. Okay, so this one you need to decide yourself. Right now, of course, if you're still a student, your time is quite flexible. Okay, your time is quite flexible, I would say. But next time when you're working, you need to consider this. So, and given these two things, what are your choice? Okay, now first, if you can do progressive top up, meaning that you can commit every month, you're going to put like $200-300 or $500 or as much as you can, but you cannot monitor the market. Okay, but you cannot monitor the market. How many of you think next time you would fall in this category? Type 1 in the chat box. Type 1 in the chat box. How many of you think that next time when you get out to work, you graduated, get out to work, you will fall into this category? Meaning that, yes, I can commit a few hundred, but I don't have the time to monitor. I need to work. And your work probably don't even allow you to take out your phone and have a glimpse. Okay, so if this is what you would be next time, your choice is long-term investing. Now, long-term investing is an accumulation game, meaning that you find something that would go up in long run. Okay, you find something that would definitely go up in long run, and then you stay invested in it, and then you do progressive top up. Every month you put 300, 500 into it, or every quarter you put 2,000 into it if you prefer that way. That is your choice. Long-term investing, and this is what I call wealth accumulation journey. Okay, wealth accumulation journey. Now, next is you cannot do progressive top up. Okay, but you have a this one is you have some capital, like maybe like 2,000-3,000. Okay, maybe lah. Okay, you have a little capital to get started. You cannot do progressive top up, but you can monitor. For some reason, you have the time flexibility. You can monitor. Then what you can do is maybe trading. Now, the more time you have for monitoring, okay, the more time you have for monitoring, the shorter term you can go. Now, for me, yes lah, I don't have a 9 to 5 job, but I do spend my time during the market opening time on other things, other commitments, other businesses. So that's why, yes, I can monitor like for maybe 2 minutes, okay, but I will spend my time on other things later. So for this situation, assuming I don't have time for much monitoring also. So in this case, what we do is, that's why I say position trading. So position trading is not speculative. But if you have a lot of time to monitor, you can sit in front of the computer from 9 a.m. to 5 p.m. Then you can do day trading. Then you can do speculation. I'm not sure how many of you will fall under this category, because This one, this is just a generic thing, okay? You can monitor, but I did not put the conditions and caveat that how long you can monitor. But generally, if you're under this category, if you cannot do progressive top up, but you have some money, your job, what you can do is you should aim for capital gain. And what you should do is trading. Okay. Now, what do? I do both. Okay. I invest and I trade. Okay. But when I trade, I don't speculate. I don't speculate. Okay. So if you can do progressive top up, you can also monitor. You are like me, okay? Then you have the choice. So I choose to do both. Okay, I invest and I also trade. I have multiple portfolios. Okay, so if you cannot do progressive top up, okay, and then you cannot do monitor as well, forget it. Okay, seriously, forget it. The reason why I want to put this up is because I want you guys to understand that in this journey, you're going to commit something. It's either you commit every month, you're going to keep topping up your portfolio and invest in something, or you commit time to do some monitoring and treat it like a part-time job. Then you can be a trader. But if you do not want to commit anything, forget it. If there is someone coming up to you and tell you that there is an investment that you just put money, no need top up, do nothing, you can make money, be careful. Okay, be careful. Okay, so this is the message that I want to share with you. Commitment is definitely required. Commitment in either topping up or commitment in time to monitor, and also commitment in learning. So if you understand this part, type commit. If you understand this, type commit. Okay, if you want to be successful in investing or trading, commitment is very important. Okay, so when capital is low, I would say accumulation is very important. Okay, accumulation is very important because if you only got 3,000 bucks, I cannot give you a solution to grow your 3,000 ringgit to 30,000 ringgit in a year time. That would be not realistic. So you need to accumulate your wealth. And for most of you here, okay, this is going to be your best choice, wealth accumulation, instead of actively trading. Because I assume that, okay, when you graduate, okay, and you get your first job, your job is going to be busy. Okay, so an active income source is still your best friend during the beginning of your journey. Okay, so don't be like some people, they just don't want to work. And then they come to me and say, hey, Jin, I got this money. How can I make money from this money trading stocks and then so that I don't have to work? Now, I don't think this is a good approach. I don't think this is a good mindset either. Okay, so keep your job. Your active income source is still going to be your best friend. Okay, and then you invest and accumulate along the way. Okay, so we all understand that. Okay, we need to invest because of inflation, and that inflation is not just 3%. Okay, and investment is not just about 3%. It's probably around 5 to 6% if you were to ask me. Okay, or higher. Okay, and let me ask you guys one thing. Okay, let me ask you guys one thing. For a start, how many percent a year do you think is good? How many percent a year do you think is good? Type in the chat box below. Okay. Anyone? 10, okay. 20. 15. Okay. Any more? How many percent you are happy with for a start? Okay, 20 to 30%. Okay, now let me just share with you. 20%, 30% is definitely very feasible, but you will need to do some timing or you would need to trade. Okay, you need to do some trading. For a start, to those who don't type anything, probably you don't know anything just yet. Okay, I'm going to share with you one type of investment that can every year give you around 8%. Do you think for a start, this is okay? If you think okay, you type okay. On average, like historically, it is 8%. But of course, with a little bit of tweaking, you can definitely get more than 8%. And last year, this investment asset give me 30 over percent. But the price only increased at 16%. So you need to do a little bit of timing. Okay, so I'm going to share with you this. I'm not sure if you believe or not. What if I tell you there is an investment that yields an average of 8% without you doing anything? Meaning that you put money and then on average it will do 8%. Do you think that this thing exists? Yes or no? Type in the chat box below. Okay, type in the chat box below. Okay, but the caveat is to invest in this thing, you need to know how this thing works. Okay, you need to know how this thing works. And this investment asset is recommended by Warren Buffett. Okay, now, meaning that even Warren Buffett recommend this, meaning that if you're not an investor or not investing or trading professions, this is the bare minimum that you need to know how to. Now, just now I have already tell you that investment is no longer a choice. It is not like, oh, I want to make more money, then only I invest. No, you got no choice. Okay, if you choose not to invest, then inflation would eat out your value, the value of your money. So investment is no longer a choice. It is a must. So when I say it's a must, it's like everyone has to invest, or else you become a slave of inflation. Okay, you become a slave of inflation. Okay. Now, by the way, let me just share with you one thing. Okay, let me just share with you one thing later. Okay, I'll share with you probably. Can I share something with you? Can I share something with you? How to become rich and wealthy? If yes, type 6. Okay, type 6. If you want me to share with you, this is something that I think right off the bat you need to understand first. Okay. By the way, this one 8% without doing anything is good in a way that because to me 8% is a bare minimum. It's a bare minimum, meaning that if you invest in something you don't get 8%, might as well you don't invest. Okay, because it's not good. Okay, so now I want to share with you one thing. Okay, I want to share with you one thing. Okay, I'm just not going to bother the slide. Okay, let me talk to the camera. Okay, I'm just going to share with you one thing. If you want to be rich or wealthy, okay, there are only two ways. Okay, there are only two ways. But before I tell you that two ways, let me just ask you one thing. Now, assuming that today, McDonald's sells, let's say 1 billion units of McChicken. Okay, McDonald's every day right now sell 1 billion units of McChicken today in 2021. Okay, 1 billion units of McChicken a day in 2021. Now, after 10 years in 2031, assuming that McDonald's they don't increase their sales volume, meaning that every day they still sells 1 billion units of McChicken every single day. Now, my question to you is this: will their profit go up? Will their profit go up? Yes or no? Yes or no? Darren said yes. Wiwi said yes. Any more? Any more? Okay. Chun Kiet said yes. Any more? Any more? Keep going. Yes or no? Okay. Some say no. Okay. Some say no. Okay. Okay. We have some People say no. The answer is yes. Why is this so? Like just now, I've already shown you. Okay. McChicken 10 years ago was only $5.95. And what's the price of McChicken today? Value meal, the set. Do you think after 10 years, McChicken will still cost the same? The answer is no. So here's the thing. When you do business, when the cost of raw material increase, now let's say today you open a mamak store, a kopitiam, okay? A mamak store, for example. Now, for example, 1 kilo of sugar, the price increased by maybe 20 cents. Okay? So, what would you do? Okay? The raw material price go up. What would you do? Can someone share in the chat box below? What would you do? Anyone? What would you do? Increase selling price. Increase the price of the meal or the drinks. Okay? Increase the price. Now, everyone knows this. Okay? This is a very common logic, right? Okay? Everyone knows this. But what's the thing that we can learn here? Here's the thing. From a business standpoint, okay, we will always transfer the cost of inflation to the end consumer. And like it or not, everyone here, we are an end consumer. We consume water, we consume food, we consume like everything. We are the end consumer of everything that you are using right now. Okay, so when there's a price hike in raw material or transportation cost, that cost is always being passed to the end consumer. The business, okay, now of course, the tauke, the boss will still say, okay, oh, business very hard, or price increase, or things like that. Hey, people still go, people still buy, people still consume, although people complain. Okay, how many people stop drinking your teh tarik? How many people stop drinking your favorite drinks? How many people stop eating roti canai just because the price go up? We still keep consuming, although we complain. That is the life. That's the fact. So here's the lessons. Businesses will always pass the cost of inflation to the end consumer. So in order to be wealthy, you need to do business. Why? Because you will always pass the cost of inflation to somebody else. So if you are working as an employee, okay, then you will always, a lot of people, they work very hard for their entire life. They just become the slave of inflation. Because like it or not, your salary hike is not going to beat the inflation. That's a fact. Okay, that is a fact. So businesses, in fact, they pass the cost of inflation to the end consumer, and they are not losing out by much. Now, some of you might say, hey, Jeen, how? But I don't want to do business. Yes, I agree. Not everyone likes to do business. Not everyone can do business. And some people, like, for example, if you are professions, okay, and like medicine or pharmacist or dentist, you have to go to work because the society needs you. Okay, so not everyone can do business, and we need every type of people to equalize the entire ecosystem. Okay, it's like everyone, it's like tomorrow you wake up, everyone is an entrepreneur. Then who is going to work in the hospital? Okay, so what's the solution of the next thing that can let you become wealthy? Is to invest into businesses. And just now we have already known that by investing, by buying stocks, you own the business. Okay, type in the chat box. You type in the chat box, own the business. So when you buy a share, you own the business. This is also another way for those who don't want to deal with doing business. The best way is learn how to invest. Okay, the best way is learn how to invest. And again, back to this one. An investment yields an average of 8% without you doing anything is understanding the market. So what is the market? The market, whenever people say the market good or bad, a lot of times people refer to this S&P 500. So S&P 500 is actually an index in the US. So this S&P 500 consists of the top 500 companies Okay, the top 500 companies in the US. So what is the top 500 companies in the US? Your Apple, Microsoft, Facebook, Google, Amazon, and right now we have like Tesla, Nvidia, and those stocks. Now, let me ask you, are these good business? If you think that these are good business, type good. Okay. If you think that you can start a better business than these companies, type not good. Okay. If you think you can do better than them, then type not good. And I'll respect your opinion because some people might think you have a good idea. Okay. You have a better idea. Okay. Maybe you want to become a Tesla number 2. Okay. There's nothing wrong. But we all agree that even if you have a better idea, okay, these companies are good. Okay. So why not we invest in these companies? We invest in the top 500 companies in the US. Okay. So now this is basically what the S&P is all about. Okay. So the S&P index average at about 8% every single year. So the highest and the lowest annual return, highest meaning that last time it used to be earning 46%, 46.59% in a single year, which is in 1933. And in 1931, it drops by 47.07%. But these are back in the days of 1930s. Okay. That time we have a very bad economic crisis. We have a very, very bad crisis. And during that time, the S&P 500 is not 500 companies just yet. There are only 90 stocks, meaning at that time, the financial market is still not advanced. But right now, in this era, things has changed. Okay. Like last year, okay, this year to date, the market has already gone up by 18%. So meaning that this year, 1st of January, if you put your money into S&P 500 and then you hold until today, you are making 18% year to date. How many of you think that this is a very this is a good return for your standard? Okay, this is a good return. Then you type me, M-E. You think that is good? Type me, M-E. Okay, to me, it is not too shabby. It is very good. In fact, considering that you don't have to do anything, you just put your money in. Okay, because why? Because the stock market has been going up. Apple make more profit, Microsoft make more profit, Nvidia make more profit, and there's a silicon shortage. Graphics cards are selling out around the world because of cryptocurrencies prices going up as well. So I think that this is the bare minimum, which is good enough for average people out there, okay, who don't know how to invest. I think this is the bare minimum. And of course, you cannot buy S&P 500 right off the bat because that's an index. So what you can do is you can buy one thing called exchange traded fund, which is called ETF. So what is an ETF? ETF is like a basket of shares. So if you buy S&P 500 index ETF, okay, if you buy S&P 500 index ETF, the fund basically mimic the movement of the S&P 500. So what stocks, what companies are being included at what weightage in the S&P 500? Then the fund managers will buy the exact same stocks at the exact weightage into that fund so that that fund mimic the return of the S&P 500. Okay, how many of you think this is a good investment? Okay, if you think it's a good investment, you type ETF. Okay, ETF stands for exchange traded fund. To me, this is a better option, okay, compared to mutual fund, because the charges are lower. And I'm going to give you a few reasons why investing in index ETF is good. The first thing is diversified. Let's say you buy S&P 500 index ETF, you are exposed to the top 500 companies in the US, like Apple, Microsoft, Google, Facebook, Amazon, Tesla, Nvidia, AMD, Comcast, Johnson & Johnson, things like that. Okay. And even stocks like Pfizer. Okay. So diversified is the first thing. Compared to you buying like 10, 20, 30 stocks out there, you need a lot of money. Okay, you need a lot of money. So the next thing is you are exposed to great companies or companies that you want to invest very easily. So for example, if you think that Amazon is good, but one share of Amazon is like $3,000 in US. Okay, so it's very tough. Okay, and then some more, you need to diversify. You cannot put all your money into one investment. Now, next thing is index is designed to go up in long run. Now, let me share with you what does it mean by this. If you understand this part, okay, I think today this is the biggest takeaway. Index is designed to go up in long run. Now, why is it so? Now, remember that why. Now, this is a thing. Why do we have index? The index. Okay, now for example, if there's a world without index, let's say, for example, somebody were to ask me, hey, today market, how, good or not? Then if I happen to look at stocks that are going up, then I say, whoa, today market, very good. But what happened if the person asks another guy, and that guy, he happens to watch stocks that are not going up, then he would think that the market is not good. Okay, so there will be different opinions. So that's why we have this thing called index. So index basically is a basket of shares, it's a group of shares whereby they have their own weightage and things like that. And the index give you an average, an aggregate idea whether or not on average these stocks are going up or down. Now, they are not the most accurate way of telling whether the market is good or bad, but it is a general idea. It is something that represents the market or the economy per se. Okay, so S&P 500 is the one of the tops, okay, apart from like Dow Jones Industrial Average and also right now the NASDAQ. Now, S&P 500 is like the benchmark of the market, okay? And it is designed to go up in long run is because, now remember the S&P 500 has 500 companies, and I said there's a best 500 companies listed in the US. So when one company is not performing, becomes bad, okay? Understand that when we buy a stock, if the company becomes bad, the stock can go to zero. It is theoretically true that a stock can crash to zero, but of course, before it crashes, you can sell. But theoretically, a stock can go to zero. Okay? Which I'm going to tell you, okay? Index will not crash to worthless, but stock will. Now, if you buy a stock and you did not monitor the market, okay? Okay, I'm going to answer Ziwei your questions. Okay, now let's say individual stock, there is a tendency that you will crash to zero if you did not monitor the market. You did not do the right thing when the stock is crashing. It will crash to worthless. But index, this will not happen to index because index is designed to go up in long run. When there is one stock out of that 500 stocks is not that performing, they will kick the stock out and replace a better one. So Tesla was being replaced last year. Not being replaced, it's being included into the S&P 500, and one stock is being kicked out. Okay, so it is just like you always get the best in this basket. Okay, you always get the best in this basket. It is like last time in high school or primary school, you always have that A class. Okay, that A class whereby the school will put all the best students in the A class. So what happens if one student, okay, does not do well in the results? He'll be expelled from the A class and being replaced with another better student. Okay, it is just like same thing. So index will go up in long run, especially those top one in the US. Okay, so if you understand this part, I think this is good enough reason why you should be looking into index ETF. Now, of course, because it is very diversified, if you are a person who are aiming for great return, like for example, you want to double your portfolio in 2 years, you want to make 50% in a year, you want to make 100% in a year, then index may not be your choice because first thing is overly diversified. Okay, it's a diversified thing. If you trade stocks yourself, if you know how to find the good stocks that are going up in prices yourself, okay, then of course, in that scenario, if you can manage your portfolio yourself, then buying individual stocks will be great. Okay, but again, this webinar, I want to just give you guys an idea on investing and what is the best investment out there that you can do. If you are into trading like I am, okay, what you can do is you can do more research on trading. You can commit more time to learn, and also you're going to monitor. Okay, of course, personally, I do a lot of trading. So if you want to learn more, I do live stream every Sunday night, 9 p.m. Talk about the market, what are the industry, what are the stocks that we are eyeing. Okay, so you can join it. But this one, just bear with me. I'm going to talk about investing only because I think that most of you here, at least you need to know about this thing. Because let's say next time if you're a doctor, I don't think you have the time luxury to trade. Okay, maybe you have, but for a start, I don't think you have. So at least there's something that you can do, which is invest into index ETF. Okay, you get a great average return of around 8 to 10%, I would say. Okay, so this thing is designed to go up in long run and it will not crash to worthless. So that's why it's good. And low transaction costs nowadays, if you are, the reason why I put a star there is because only if you are using foreign broker like those in the US, then it'll be low. If you buy with Malaysia platform, please don't do that. Okay, it's going to be expensive. Okay, it's going to be expensive, the cost. Now, so you don't need to be a genius to beat the market. Okay, so right now you already know that. Okay, all you need is appropriate holding power. Like I said, you keep accumulating, and you consistently make regular investment or top up, and understanding that indexes are created to go up in long run. What you can do is, if you have more money, you can buy more if the market has a correction or a crash. Okay, we can buy more when the market has a correction or a crash. I will try to show you if I have time later. What do I mean by that? Okay, so when the price go down, you can accumulate the index, but don't all in. Don't all in. But I don't encourage people to do that with stocks, because individual stocks can crash to zero if you make the wrong decisions. Okay, so again, I put a warning there. So if you like to learn, if you like to trade, you can start learning and trade with small amount before you scale up your portfolio. Okay, now another thing that I really want to share with you is this. It's called NASDAQ. Okay, because the S&P 500 is what a lot of people have been benchmarking. But another thing that I want you guys to look at is NASDAQ. So NASDAQ is another performing index. It's an exchange actually that you should not ignore. Now, US, we have a major three market index. The first is Dow Jones, second is S&P 500, the third one is NASDAQ. So for the last 15 years, the US major market index like DJI, S&P, and NASDAQ average at 6% per annum, 6% per annum, and 10% per annum. This is the last 15 years. So you can see that for the last 15 years, NASDAQ actually outperformed the rest. Okay, and the biggest calendar return for S&P 500 and NASDAQ are 46%, which is 1933, and I put a star there. That is when the index adopt 500 companies, and whereby for NASDAQ in 1999 it went up by 85%, and after that, you know, there's a .com crash. Okay, because NASDAQ, 48% of NASDAQ consists of technology stocks. Okay, consists of technology stocks. Okay, while the bigger calendar year drop for S&P is 47 and for NASDAQ is 40%. So what I want to share with you here is technology is something that you should look into. Now, we have been in what we call revolution. So if you study, let's say if you study sejarah last time, you will know that the history when like the British come here and things like that, we have a industrial revolution, whereby during that time, the mining industry, the coal, the timber, whatever thing, is something that lead the market. Okay, is something that lead the market. Okay, so during that time, if you're a company that are in those sectors, probably you're going to make good money. And the second revolution that we have gone through is the financial revolution. That is like when like 1970s and 80s, starting from there, whereby financial infrastructures are being building up and people can borrow money easier than before. So during that time, you can see that in like 1980s and 1990s, a lot of banking stocks are going up. So during that time, in the US, like those Bank of Americas and things like that, they are really crushing it. But right now, what is the thing that move our society forward? Can somebody type in the chat box below? What is the big thing that move our society forward and it will still be the same after like 5, 10, or even 20 years? Darren, you got it right. It is technology. The only thing is maybe different subsector. Last time, maybe the booming one is the semiconductor, the software and things like that. Maybe after a few years, it could be another thing. It could be AI coming out. It could be electric car coming out. It could be other things, but it is still within the realm of technology. So that's why NASDAQ is definitely one of the major indices that you should look into. Does that make some sense? If you learn something from here, okay, type yes in the chat box. Okay, so let's say if you want to invest, it is good to have a little bit of maybe the S&P 500 or the NASDAQ ETF. So the NASDAQ ETF is called QQQ. Okay, it's called QQQ. So the S&P 500 index ETF, you can buy the SPY or like VOO or IVV. There are a few. You can just Google S&P 500 index ETF. Then you have a list. Okay, so I'm going to give you solution. Okay, now because like it or not, the S&P 500 index ETF. Okay, the S&P, let me just share with you. Let me share with you. Wait. Let me just screen share. Okay, can you see my chart right now? Can you see my chart? If yes, type yes. Okay, good. So this is the S&P 500 ETF. Okay, which is the SPY. So you can see that 1 unit of SPY is $445 US dollars. So to buy 1 unit, okay, to buy 1 unit, you would need quite a number of money as well. Like maybe at least like close to 2,000. Okay, whereas for the NASDAQ, QQQ, for the NASDAQ, you will need like 368. Okay, 368. Okay, so it is still quite out of the reach, okay, for most of you. I would say for most of you, okay, unless you have like 2,000, 3,000, 4,000 to start. But again, there's only like, you can only buy 1 unit, okay? Now, here's the thing. Yeah, here's the thing. There is one solution that you can start with only 100 ringgit. Do you want to know about that solution? If yes, type absolutely. Okay, if you want to know that, there is one thing that you can tap on, that you can start with 100 ringgit only minimum. Okay, type absolutely. Now, of course, I don't mean that you just put 100 ringgit and it's a life-changing things, but it is good to get started, because understand that you want to buy directly these ETFs is nowhere a budget-friendly thing for most of you, maybe. Okay, so okay, somebody mentioned, okay, Kao Zui mentioned, foreign index fund. Is it really best for starters to invest into foreign stocks than Bursa Malaysia? The answer is yes and no. It depends. It depends. Okay, so Bursa, we have Bursa on problem. Okay, and Bursa index is not going up for a long run. Okay, it is going down. Okay, so that's the thing. And for individual stocks, it depends. It depends. Okay, if you want to buy individual stocks, note that, okay, for US, the minimum quantity is only 1 unit, whereas Bursa is 100 ringgit. 100 units. And Bursa, the fee is generally higher than US because US you get a lot of commission free, meaning that you don't have to pay brokerage fee already in the US, but you will have the hassle of transferring the money out from Malaysia. Okay, out from Malaysia. That would be the problem. Okay, so what I want to share with you is this. There is a solution that I don't get to have last time. Okay, is this. Solution for low capital investor is robo-advisor. So can you see the slide, back to the slide again? If you see back to the slide again, type yes. Okay. Just want to check what's at your side. Okay. Because last time I talk, then somebody say, hey, you are not at your slide. Okay. So solution for low capital investor is robo-advisor. And let me share with you what this robo-advisor do. So this is one of my portfolios, because I don't really put money into robo-advisor, but for the sake of testing, because a lot of people want or need this kind of investment. So let me just share with you. I start this at December 2020. Okay, from there until now, the total gain is 18.87%. From December 2020 until now, earning 18%. How many of you think is okay, is good enough? If you think it's good enough, you type good. Okay? If you think it's good enough, you type good. Okay? So, to me, if this is not good, then I don't know what else. Because you can, okay, start investing with just, okay, with just 100 ringgit. And you look at the portfolio here, you can see they are investing in like EWH. They're investing in like EWJ. These are basically the top of the lines ETF for each and every country, like EWU, like EWT. Okay, now I want you to put your attention. Okay, I want you to put your attention to a few like QQQ, like VTV. Okay, so what you can do, okay, what you can do is, let me just cut to my another screen again. What you can do is basically this. You go to search QQQ in the Google, and then you type QQQ ETF, and then you can go to, and you can see my you can see my Google, right? Okay. So usually I will go to ETFDB. Okay, this one, etfdb.com. There you type, you can see Invesco QQQ. So you can go to like holdings. You can see this fund is buying Apple, Microsoft, Amazon, Alphabet, Facebook. Alphabet is Google. Okay, Facebook, Tesla, another Alphabet, Nvidia, PayPal, Adobe, Comcast, Cisco, Netflix, Intel, PepsiCo. Your money is being exposed to this. Okay, and another one is a VTV. Okay, so you can do the research yourself. You can do the research. VTV, and you can go to like holdings. You can see Berkshire Hathaway, Warren Buffett's company, JP Morgan, okay, Johnson & Johnson, United Health Group, P&G, Bank of America, ExxonMobil, Comcast, Intel, Verizon, Pfizer, Coca-Cola. Those are really the big giants in the US market. Okay, so now I want you to imagine this. With as low as $100, you can get started. Okay, you can get started with just $100, and you are actually having exposure to like QQQ, to VTV. You can Google all this. Okay, when your portfolio is being allocated with some ETF, okay, you can go and Google all this. But of course, unfortunately, you don't get to choose your you don't get to choose which ETF you can invest. They allocate it for you. Okay, so these are the one that they allocate for you. And I can tell you, these are top of the lines ETF already for every country, I would say. Okay, for every country. So with starting from 100 ringgit, if right now you don't have a job yet, maybe, okay, you can start with 100 ringgit every month. It is good for a start. Okay, you get what I'm trying to say? It is good for a start because everyone, you need some action plan. You need to start somewhere. And this platform is called Myteo. Okay, this is my favorite when it comes to robo advisor. Okay, so because they invest in foreign ETFs, which we prefer. Okay, which is good lah. Okay, now next is I want to talk a little bit of how to scale your portfolio in the future. So I'm just going to quickly go through this because I'm running short of time. So you're going to learn how to manage your portfolio with proper management and risk, proper portfolio management and risk management. Okay. Now, just now somebody asked, ETF and stock, which one is better? Now, there are two sayings. If you can manage yourself wealth, definitely individual stocks can do better in terms of return. Like you can find some stocks that make a lot of money, like the trend is very good, okay, that go up like 20% in half year, okay, then that would be a great one. So, but of course, you need a lot of commitment in learning, okay? It is not a set and forget things. You forget, you die, okay? It's unlike the ETF that I mentioned just now. You can set and forget and you still can keep top up. If you manage your own portfolio, you set and forget, you're done, okay? So now, the ideal minimum capital, I would say minimum, okay? Meaning that it is good in terms of like with proper portfolio. Now, let me just explain a little bit what is proper portfolio management. So proper portfolio management basically means you, with the money, you can diversify into 5 to 10 stocks. Okay? US market, I would say, is at least $2,000. Bursa market is $20,000. And there are proper way to manage your portfolio. I cannot share too much today because of time constraints. If you guys want to learn from me more about trading and how do you manage portfolio, like how the fund managers, probably you want to follow me on Facebook because sometimes I do get to speak, okay, for investment banks and they have the different types of clients and sometimes you can tap on and then you can listen for free, okay? So that's the thing, okay? So proper portfolio management is boring but very scalable. Okay, boring as in if a stock go up like 20%, your portfolio only go up 2%. Okay, because you diversify a little bit. So this is the key that you need to know. Okay, it's very, but with proper portfolio management, is very boring but very scalable. Now, if I'm not sure if you know that there are some people who get to trade forex with like maybe $300, $200, as low as that. When they have $200, they do well because they buy with $200, they make money. 200 to 250, they make money. They become very excited about it. But after that, when they put more money into it, they start to screw up a lot of things. It is because their strategy is not scalable. Okay, it's because their strategy is not scalable. So that's the thing that I want to share with you, but I cannot, I don't have enough time to talk about this, but just keep it in mind. Okay, proper portfolio management. Now, let's talk about retiring earlier. Just now we say that, okay, most of you want to retire at 40 to 45. Is it possible? Now, let me share with you that it's very possible and there are many ways to retire. Technically, you can retire when you have a sum of money to sustain your retirement. Okay, you can sustain retirement, meaning that you have like 10 million for retirement, okay? But this is a worst way of retiring is because you keep using your money, and that is the average people right out there. They work very hard, they put the money into retirement plan, and when they retire, they get the money and they spend. This is the worst way, and most people cannot make it. Okay, most people cannot make it. So I don't recommend this. The second is your passive income exceeds your expenditure. So for example, you have a portfolio of stocks that give you dividend, like 10% dividend yield every single year, or you have a lot of properties that give you a lot of a lot of rental income, and you can sustain with that. So you can also retire that way. Now, another way that solely rely on these equity market is this. Your portfolio can grow a decent percentage consistently, for example, at least 8% per annum, and you withdraw a portion of the return and then leave the rest for inflation adjustment. Your risk of running out money is extremely low. This is what we call the 4% rule. How many of you you have heard about the 4% rule? You type 4 in the chat box. Type 4 in the chat box. No one. Okay. Seriously, no one. Okay. Now, this is what the 4% rule is. Now, what you want to do first is you grow your fund by 8% every year. Okay. Now, again, what are the ways that you can grow your money by 8% every year? Type in the chat box. Okay. What are the ways that you can grow your fund by 8% on average every year? Type in the chat box. Okay. What's the method that you have learned today? Okay. S&P 500 ETF, very good. Not only that, you got other ETF as well. Okay. So, hey, you better type something, okay, guys? Better type something, or else I thought my computer hang. Okay. So now the first thing is you grow your fund by 8% every year, and you withdraw 4% of the portfolio value, and the remaining you will keep in the portfolio as an not investment adjustment, sorry, inflation adjustment measure. So it's not investment, inflation adjustment measures. Okay, so let me show you what is this. Let's say you have 1 million of money fund. Your fund would worth 1,080,000 after a year with 8% return. Now, what you can do is you can withdraw up to 4% of this total portfolio, and which is you can withdraw up to 43,200 a year. Okay, leaving 1,036,800 inside of that retirement fund. On the second year, your fund would grow to, okay, your 1.036 million will grow to 1.119 million, and you can withdraw again 4%, which is 44,790 ringgit, and have a balance of 1.0749 million, which is which means the balance is 3.68% higher than the previous year balance. Now, this is good in a way that, okay, in this case, both your retirement fund and your withdrawal amount are inflation adjusted, meaning that your retirement fund every year will still appreciate in price, and your withdrawal amount will also appreciate, meaning that down the road, you will get more and more and more money to spend, and your portfolio will still grow larger and larger and larger. Okay, so how many of you understand this 4% rule already? You type 4%. Type 4%. Okay, very good. So after you understand this, you can reverse engineer yourself. What is your dream life? Okay, you reverse engineer with your own number, with the lifestyle of your dream. What's your dream life, and how much would that cost? Maybe you want to have a life that will cost you 80,000 a year, or 100,000 a year, or 150,000 a year. Then you use that, you reverse calculate, you divide by 4%, then you get your number. That is the number, maybe 2 million, maybe 3 million, that you need to accumulate along the way. So how you accumulate? You can use S&P 500 index ETF, or you can use NASDAQ, or you can learn how to trade stocks, or you maybe next time when you are out there working, you can buy properties. Okay, and after 10 years, if a property flip in value, then you can get a couple 100,000 or even $1 million ringgit spike in your net worth. Okay, so what are the action plan? First thing, start now, and you can start with as low as 100 ringgit. There is no excuse that we can give anymore. Last time, things are different. We don't have such a great opportunity because last time, 100 ringgit, we can only buy mutual fund. And mutual fund, when we put 100 ringgit into it, straight away, 5% is gone because of the service charge. Okay. And for robo-advisor, you wouldn't get this issue. You put 100, 100 is your net investment. There's no charges. Okay. And you can get to learn more about different ETFs and stocks. Along the way, you're going to learn. And next is set your goals. Okay. What's the number you need to retire earlier and things like that? Okay. Set your goals. Increase your active income. So at the beginning stage of your journey, your active income is still your best friend because it will have the ability to increase your commitment into your wealth accumulation journey. You can buy more ETF every month. You can buy more stocks every month, things like that. Okay. And decide whether trading is something for you. Okay. This one you need to decide because if you don't know how to trade, then you learn how to invest, learn how to pick good ETF. If trading is for you, you got other things that you need to learn, commit into learning. Okay. And last but not least is you don't want to restrict yourself with only few asset classes. Start with one and don't restrict yourself to learn more. Okay. And just to share with you that every night, every Sunday night right now, 9 p.m., I will go live at my Facebook page, and you can join me to learn more about the market movement and stocks. And basically, this live stream, I comment things based on a position trader's perspective, meaning that it is not about investing like what I share with you today. It is about trading, and it's the specific trading approach and strategy that I personally use. Okay, so we have reached the end of the sessions, and thank you very much. So I guess I will see you when I see you. And to answer one question that someone asked just now, what is the platform that I use to buy US stock? I use Interactive Brokers, but Interactive Brokers is a little bit sophisticated, this platform. For a start, you can try TD Ameritrade or First Trade. You can also use Interactive Broker if you want to. Okay, where and how to buy? You open an account from them, but you need to learn how to transfer the money out from Malaysia to the broker. Okay, so I cannot cover the exact steps, but you can do some research. Okay, so I think I passed the time back to the committee. Should I stop sharing?
Thank you so much, sir.
Okay.
Yeah, that was a wholesome knowledge sharing from you. So now we'll be opening up for a Q&A session to allow participants to ask all their doubts to you, Mr. Jin Hao. Kindly type down your questions in the chat box, and I can help you guys to read out the questions.
Any questions? Okay, I think I get a private message here. Best robo advisor in Malaysia right now. Now I wouldn't compare like which one is the best because there are just a few and I don't get to use all of them. Now I'm just sharing with you my experience with Myteo is good, and I like the fact that it is the robo advisor that allows, not allows, they allocate a huge portion of your money overseas. It is 100% overseas. They don't invest in Malaysia. Okay, so that is the sole reason why I get into. I think Myteo is good because you can do your own research. What are the ETFs that your robo advisor, like Stashaway, like Wahid, you can go and do some research on what are the ETFs that they allocate your money to. You need to understand this. And that is why I think MyTio is good for a start. Okay, so speaking of robo advisor, where do we find it? Like, just go to their website. Okay, MyTio, MYTHEO, or Stashaway. Okay, or you can Google robo advisor in Malaysia. They'll give you some. Okay, and everything is online. Okay, any more?
So there's one more in the chat box.
Oh, okay. Forex trading and cryptocurrency. Okay, now let me just share with you. I don't trade Forex. I don't trade cryptocurrencies. Okay, so whether or not trading is profitable at long run, it depends on you. It is not the instrument. Because if you are profitable, you can profitable in Forex trading. If you are profitable in cryptocurrency trading, you can do so. If you are profitable, if you are good in trading stocks, you can beat some of the top traders in the Forex field as well. Okay, so it depends on the skill. Okay, but I wouldn't say that which one is better than another, because these two are very volatile. So when something is volatile, then you get a lot of opportunity to maybe do some speculation. Okay, but again, it backs to your approach. Okay, primarily I trade stocks. I primarily trade stocks and alongside some options. So these are the things that I'm good at. I traded Forex before. I traded cryptocurrencies before, but I choose to focus in stocks, a little bit of options, and also futures. Okay, so these are what I do. Okay, because you cannot just trade too many things. Okay, like my brain, I have to split into like 10 portions later. Okay. Do I have any openings for stock market class? Temporarily, I'm actually taking a break from teaching. Okay, I'm temporarily taking a break from teaching, but I continue to do my weekly live stream. Okay, if for classes, temporarily I stopped doing it because the accountability and the commitment is quite high at my side. Okay, so I temporarily take a break. Okay, yeah, but you can attend my live stream first. You will learn a lot of things. Okay, every week Sunday at my Facebook. Okay. All right. Any more questions? All right. Okay.
Suppose that's it for the Q&A session, sir.
Mm.
So again, I would like to thank Mr. Jeen for the answers. The link for the feedback form is now in the chat box. So go on ahead and fill up them, guys. So now it's time for a quick photography session. All participants kindly open your videos and stay static and position yourself with some good lighting. I would like to invite Danisha to handle the photography session.
Okay, thank you, Kani. We request all of you to switch on your cameras. Maybe you can give a few seconds to. Okay, I think you can start now. Okay, 3, 2, 1. Okay, once again. Okay, that's all. Thank you.
Thank you, Danisha. I believe that pretty much sums up our webinar for today. On behalf of Rotary Club of AIMST University and Rotary Club of Bandar Sungai Petani, I would like to express my deepest gratitude to Mr. Jeen Ho, who spared his time so that he could join us today and share his knowledges with us. Also, once again, I would like to thank all the participants who sacrificed your weekend mornings to join this event. You guys are the source of motivation for us to keep doing great things like this, and we hope you guys will keep supporting us. I sincerely apologize for any troubles throughout me hosting this webinar. Thanks a lot, everyone. And you guys can scan the QR code to obtain the feedback form and your resets. Thank you.